day, traders. This is Roger Scott, and welcome to our premium tutorial for Friday, May 17, 2013. Today, I'm going to jump right in and discuss the U.S. stock market. I'm sure you've noticed that the market has been going straight up, and I've been getting a lot of calls and emails asking me questions such as how far do you think it will go? And do you think we'll have a pullback, or do you think we will crash after this move? Here's my view of the current market environment. The first thing I want to do is see if the stock market rally is being perpetrated by a few large cap stocks that are inflating the market artificially, or if the market is being driven by a good amount of medium cap and small cap stocks as well. In this case, I did a study today to see how many stocks priced over $5 that have an average volume of over 250,000 shares are reaching one-year highs and reaching one-year lows. The higher the ratio, the better the odds that the rally is real and meaningful. I found over 417 stocks making one-year price highs and only 50 stocks on the list making one-year price lows. That means that the ratio is over 8 to 1, which is huge. This tells me that the rally is not superficially being driven by a handful of large cap stocks. The second important factor I looked at was different sectors to see how many sectors are increasing in value and how many sectors are declining in value. This was even more shocking because only one sector, the beverage sector, lost money this week, and all the other sectors, and I'm not going to list them here, made money over the last week. This is another very strong clue to suggest that the U.S. stock market rally is broad-based and meaningful. This also tells me that if the market drop occurs, it would take a large percentage of stocks across different sectors to come down to cause a large slide. This demonstrates that if and when we do come down, we will experience a slow correction instead of a large slide. Traders who have followed me for some time now know I use the RSI indicator to measure overbought and oversold market levels. I changed the settings from 14 to 9 because of the shorter time frame I use. The RSI is extremely conservative indicator, meaning it takes a lot to get it moving, and you can see how it's hitting 80, which is considered dangerous overbought levels. My take is the market is going to rally beginning of next week. If you're currently long the US stock market, you should be ready for a correction sometimes in the middle of next week. I don't think going for large profit targets is going to work during the next few trading days, and scalping or short-term trading opportunities are probably best. Next week, we should start seeing some tail gap reversals to the downside as well. One sector that I'm looking at are luxury apparel and shoes. One stock that I'm monitoring and getting ready for a 4x4 entry is the Fifth and Pacific companies, which used to be Liz Claiborne. The entire sector is rallying strongly with the rest of the market. However, this sector had strong sales recently and may continue moving or sell off less than the rest of the market in the coming days. The other sector I'm looking at is the car and truck accessory sector, especially those that deal with U.S. car manufacturers. Take a look at this chart of MGA stock. This sector has been moving strongly during the last 6 months and should continue moving in the right direction as long as the stock market doesn't sell off too much. That's it for today's tutorial, and I hope you have a great weekend. I will have another update on Monday and an earlier one if I see something happening urgently. Have a great weekend, everyone, and I'll see you on Monday.